Okay, so we are about a minute or so away from one price populating, about a minute and a half or so. And we're coming off of yesterday's Apple reaching the 1 trillion mark. So markets got pretty excited about that. You know, the thing about one price is it's a lot of people just assume that, you know, there's an exact entry, there's an exact stop loss, there's an exact profit target, and it's not the way it works. The way it works is that it's going to look at the overnight activity and plot a number, you know, a price that has the best chance of being hit. It doesn't always hit that day, so we might not hit it because we've run up so high. Almost guaranteed it's going to be below us, and so I already know I'm going to be looking for a short position. The other reason I say that is because we are at our high of the overnight session. We are almost an hour and a half from market open, hence my groggy voice. And I've got a price level pretty close to here that I'm already looking at resistance. So it doesn't really matter how you get in. If you're going to use it as a target, just find a way to get into the market. You know, don't just randomly click buy or sell. You know, you need to find a way to do that. Okay, so we're moving now. Let me reload this. Okay, so we're already in a trade that I would look for. So I'm actually going to, I don't normally do this, but
Order filled.
you know, I'm not it's a really bad entry in a lot of ways, but I got in because I have a price level above here, not too far. I would already be in, but it didn't work out that way. Just the way it happened today. So I'm in short here, and so what I'm looking to do with one price is I'm looking to use this as a target. So the thing about one price is that a lot of times, you know, it'll go to the tick. Sometimes it will go past it. We've got a couple of things to keep in mind here. Today is the unemployment rate and non-farm payrolls, and that is almost always a big market mover. So in about 30 minutes or less, we're going to have that announcement. So, you know, I want to be a little bit careful because if right now is our low and then we just rally, then obviously I'm going to want to look to get out of this trade. But as of right now, with the use of one price, I am looking at this price level as a target. Now, we could keep going down. It could take a couple minutes to get there. It's possible I could be in this trade for an hour. If that's the case, I won't bore you and I'll just cut this video down. But the most important thing is to just keep this simple. You know, find a way to get into the market. You know, there's no way to teach you how to do that. You just, you know, however you trade, that's what you need to do. This is a tool. It's used, you know, you use this, in this case, right now I'm using it as a target. And then, you know, you can use it to you know, buy or sell off of. If the price was below one price, then I would look, you know, if it reaches it, then I would look to, you know, get in short. What I'll probably end up doing is try to get out just before, you know, maybe, in fact, I'll just do that right now. I'm going to
Order pending.
put a limit order there, and actually I'm going to get in long again too.
Order pending.
Okay, so what I just did, this is actually how I mostly trade this. If there's a good entry that I like that's leading up to use one price as a target, I'll get in. I really just wanted to make sure I got in a trade to show you after the email I sent yesterday. But most of the times I'm going to use this as, you know, some you know, support or resistance, using it to test, because if it gets there, it's going to, you know, historically it's going to test that. There's a really good chance that it will test it. So that's how I prefer to trade it, but there's really four main ways to trade it. You know, you can do it this way, how I'm using it as a target, and then you can use it, another way would be to use it as support or resistance, and then really the two variances of that is like a retest. So if we hit it and we bounce up, then I'm going to look to, and if it comes back down, you can try it as a retest. It's possible that it can break through. If it does break through, then what I would do is use it as a a retest on the opposite side. So if it breaks through, we've obviously broken support, and then I would look for it to test as resistance. I get the question, well, how much does it have to break through? Look, here's the deal. This is the ES. Gold is different, and that's different from Forex. So there's no magic number, but you just kind of have to get a feel for what the market's doing. I prefer a significant break before I look to to retest it. So what is significant? I don't know. A couple points, 2, 3. It depends what the market's doing. If the market's not moving a whole lot, it's going to be obviously smaller. If it has really good movement, then I'm going to look for a little bit bigger break. But if you just go back in history, you can see which ones have bigger breaks than others, and which ones end up being better trades to get into. So it's just it just comes with practice. So we're just kind of sitting here. We've got I don't know, what time is it? It's 07. So we've got about 23 minutes or so until the announcement. We could run up here, and if that's the case, I've got another price level up in here I'm looking to short. So if it goes there, I'll probably just average in, and then hopefully take a smaller loss on this position. And then we didn't hit it today, but hopefully we do. And if we do, then here's my exit and another entry. So I've got 5 to exit the short, and then 5 to go long, and then I'll look to get out. I don't know where. We'll just have to see where what the market's doing. So we'll come back, and I'll turn it back on as price hopefully approaches this, but for sure by the announcement at my time 6:30. I'm in Mountain Time Zone currently. Okay, so we have just over a minute before the announcement comes out, so hoping this will be good. So people will ask me all the time, what should I put as my stop loss? What should I put as my profit target? And my answer is, I have no idea. I have no idea what size of account you have. I don't know if you can handle, a 5-point loss or a 200-point loss. I don't know what, where you're at with that. But even if I did know, the market isn't rigid. If you get in at this price, then put a 2 or 3 point stop, or a 4 tick stop, or a 2 tick stop, or that's not how the market works. The market's just going to move, and what we have to do as traders is just get in on the movement. And obviously we hope that it goes in our favor. Right now I'm barely positive, and I was up a couple points a minute ago, but I'm looking for a target. So if this runs up, then I'm going to look to get short above me and get out on this position, hopefully with minimize my loss. But it's just the way it goes. But there's no magical number. Oh, there we go. Boom. Oh, and so I'm in long too. Okay, that was quick. This ended up being a good announcement. So okay, so that was pretty gnarly. I need to actually get out of this thing. So I'm long. I'm actually placed. I guess I'm at
Order pending.
31. I should just go above, but what? Very candid.
Order filled.
There we go. So I could have done that a little bit better, but and that was a lot faster than what I had hoped for. But very candid, and there you have it. That's how I'll typically trade it. So here's the thing with this. I was hoping this would be at least this rundown would last a little bit longer, so you'd actually see what's happening here. But the announcement came out. That was pretty big. What was that? 26 to 32. So almost 7. Wow, that was a 7-point candle. I don't even have the data in front of me. What the numbers were at. but people were excited, obviously. So, just in recap, this worked out really well today. There's two ways to use it. You saw the first one. I'm getting in the direction leading towards one price. And again, I need to stress, you just have to find a way to get into the market. I sold at market because I would have already been in a position based on some other tools that I use. That's the reason why I did it. I didn't just shoot from the hip and just get in because there's one price and it's going to go to it. If you look at history, let me pull up the stats here. If I show the stats, so we've got the last 30 days, 93%, so it has a 97% fill rate over the last 30 days. That's just how many days I have loaded. Every span of time is going to be a little bit different. So what that means is that it took 1 day for 93% of them to get filled, and it took 2 days for the remainder. So 97% fill in 2 days or less. So that's pretty good. So when you have that type of probability on your side, then it's a little bit easier to take risk. But even with a 97%, which is insane if you think about it, it still doesn't mean that you just jump in the market just because you assume that price is going to hit this. If you go back, there are obviously 3% of the days have not been hit yet. So that, what is that, like one? If you do the math there, there's 1 day of the last 30 days that it just never got to. The market just took off. And those are the days where one price will not get hit. If you look at any day where one price doesn't get hit, they're basically runoff days. The market just takes off in one direction or the other, and it doesn't look back. Those are the days where one price will not get hit. So if you think that you can just get in at market because you're assuming that price is going to come back and hit this level, you have to use strategy behind it. I already had a backup plan, and I explained that. I have a price level up, it's actually a bit higher, that I'm looking to get short on anyways, and so I'm okay taking even a several point hit because I'm gonna at least average out of that position and take a small loss on this original position, and it's not going to be a big deal. Okay, so that's my backup plan. So you have to have a way to do that. To make it very simple, when you're starting out, if that's a little bit too complicated, then just use one price as support or resistance and test it. It tested here. How much did it break? It went down to 26, so you would have been down a point. You would have had to get out. So this was let me just make this a little bigger. This was a good example because when the market's moving really fast, you have to react a little bit quicker. Okay, I don't know what is going to happen. This could slam down 100 points. It probably won't do that. But, I don't know if this is going to come back and retest this and then go up 20 points. I don't know if it's going to, come down. But when the market's moving fast, obviously something's going on. Now, obviously we know that we have a pretty major announcement that came out today. And so we're going to want to react a little bit quicker than we would on a normal day where the market's just kind of doing its thing. Okay, so if this would have lasted a little bit longer, which I would have preferred, then we could have had a little bit more discussion about what to do, where to take profit, things like that. So the reason why, let me just back up. The reason why I took profit here was there was two reasons. One, it's just moving too fast. I don't know what's going to happen. This thing could just keep going down, and I want to take profit. The other thing too is if you look at this high right here, we set this high and then we retest it here, within a tick or so. So we've got some resistance here, and then it broke up through here, and then now it tested as support, and it sat there for a while. So a lot of times those can be good areas to get out because it's the price is usually going to fluctuate and test different areas like that as support or resistance. So that's one thing that you can use. But this is really simple. It's not there's no squiggly lines to try to figure out indicator wise what's this MACD doing or this moving average doing. I personally don't use that stuff. It's lagging information that I find no use for. I prefer, predictive modeling type of tools, which is really the only thing that I use, because it's, based on probability rather than after the fact information. But that's it. So kind of a longer video, but you get a feel for how this works. It's a price that has a high probability of reacting to, and there's a really good chance, obviously, as we can see, this is one of the reasons why I built this in there, so you could see, is this tool that I'm using working? I would say 97% means it's working pretty well. So a lot of fun to use. You can use it on futures, Forex, Forex futures, if you trade like 6E or the 6J, things like that. So, and then there are some markets, internationally, if they overlap on the overnight session of the US, then they can work, but for the most part, nearly all the futures and Forex markets, this will work for.